Welcome to Markets Today. I'm your host, Mbithe Mwema. On this day, we want to take a different trajectory in as far as understanding investments. We want to take a look and understand what is the means of distribution and what role does fintech, rather financial technology, have to play. And this is the context where we are coming from. In countries such as China, today financial technology is actually 86% of the money market funds in that country. Financial technology has in that particular country come in and formed a very easy way of distribution, connecting investors to investment opportunities and making it much easier for people to move their money into investments as well as move it out of investments. Kenya is known for its M-Pesa technology and the revolution that M-Pesa has had on the economy of Kenya. But the question is always, over and above having M-Pesa and the ease of transfer of payments, how easy then can we leverage on either M-Pesa or financial technology to ease the access and usefulness as well as usability of investment opportunities in this country? We are joined by Mr. Edwin Dande, who's the Chief Executive Officer of Cytonn Investments. Cytonn Investments last week launched its Cytonn Fintech company, and it's in a bid to actually get access to its consumers as well as possible and potential investors via the mobile phone and the use of financial technology to enhance its distribution. Edwin will be taking us through what that means, at least for you as a user of investment opportunities or other investment services as well as products in this economy. Welcome to the show, Mr. Dande.
Thanks a lot, Mbithe. Happy to be here.
Okay. Before we get into the financial technology and the company that you have just launched, perhaps you can just give us a quick schematic of what's happening in investments, because we've seen a lot of uncertainty, a bit of volatility across different asset classes. So what should investors be thinking about, and are there things that are worrying you today?
Thanks a lot. Now, of course, everybody is impacted in this COVID environment. When there's uncertainty, people want to hold on to cash. They don't want to make long-term investments. They want to be able to access their cash anytime that they need it. Now, to be able to access your cash, you definitely need to be able to access it from a digital perspective rather than going to the bank and waiting for your cash. We've been investing in technology for, I would say, over the last 1 year, but we really had to accelerate that deployment, especially now given that people are going contactless and given the COVID environment, people don't want to touch things. So we looked at money market as a very good opportunity to deploy technology. Let me give you an example. If you look at the average money market fund in this market, to withdraw your money, you have to fill in a form, scan it, send it somewhere, and wait 2 to 4 days. And as you said, in a place like China, digitization of money market fund is the norm. So we asked ourselves, but the money is already in the bank. If you want it, why can't we make it instant to your M-Pesa or to Airtel Money, instant to your bank, instant for you to pay bills? Like today, if you want to pay your KPLC bill, right from your money market, you instantly can pay your KPLC bill. And if you're in the network and you need to transfer money to someone else who's in the money market fund, you can do it instantly at no cost. So that's the opportunity that we saw. Let's make it easier for our clients to transact with their money that we already have in the money market fund. Hence the Cytonn wallet, which is built around the Cytonn money market fund. So what was driving it is to make it very easy for the client to access their money and do with it as they wish. And when you don't need your money, when you need it, it's instantly available. So that's the opportunity that we saw.
So how does the Cytonn wallet work?
Now, the Cytonn wallet works. You just take your phone and you dial *809#. Once you dial *809#, you can register and be done with it within 5 minutes. We do our KYC, know your client, know your customer process through your ID. We check it against the government database. We know that this is a legitimate person that exists, and then we open the account. Now, once we open the account, the next thing is that you have to fund it. You can fund it through M-Pesa, You can fund it through your bank, either going to the bank and depositing money in the custodian account, or you can fund it through RTGS directly into the account. Once money is there, it starts earning for you that 10% per annum. So you can see your money grow on a daily basis, and the interest is credited every single day. Now, once the money is there, and we all work hard for our money, it doesn't make sense to leave it somewhere where it's not earning for you a return. So once the money is there, it begins to work hard for you also. You are earning a 10% return on it all the time. Then the moment you need it, it's a question of what do you need it for? If you need to have it in your bank for you to write checks or to meet other obligations, you can quickly get it within 3 minutes, right into, and we're trying to reduce that time so that it's within seconds. But the technology and the integration that we have right now, within 3 minutes, you'll have withdrawn it from your money market account into your bank account. If you want it into your M-Pesa mobile money, whether it's M-Pesa or Airtel, you withdraw it and directly to your M-Pesa. Then you also want to pay bills, as I mentioned. We have a whole host of billers that we are now integrated with that you can pay directly, whether it's DSTV, whether it's Zuku, whether it's KPLC. And more we are talking to people to accept direct payments from the Cytonn wallet to pay bills. So we have a department that is onboarding many of these suppliers and vendors so that they can accept payments from the Cytonn wallet. And as I said, the other neat thing is now being able to transfer money within the network, because you cannot transfer it outside the network. But as long as somebody is in Cytonn Money Market Fund, which is the fund that earns the interest, and then you have the Cytonn wallet around the Cytonn Money Market Fund, as long as you're in that network, so Peter, if I owed you 1,000 shillings today, I can now transfer it to you at no cost. I don't have to pay anything to transfer money. I mean, think about it. We already have your money, and we are all in the same network. Why would it cost me anything to transfer it to you? And when you don't need your money, I've invested it, and I'm keeping a fee for whatever return that I make.
Sounds like it's also a good solution for people who are in chamas or in groups where they put money together. And if it's more of a revolving facility, then if we put the money there, then it can revolve from person 1 to person 2 or to person 3. Would that be a good way of looking at it?
Yeah, for a chama, I mean, anybody who has money that they don't need certainly need to earn a return on it. And the other thing is that as you're earning a return, it needs to be easily accessible when you need it. So fit that category because they are contributing, and usually they have this money seated in a bank account as they consider what to do with it. So what we would do is what they would do is to open what I would call the master chama account with us, and then the chama members can open sub accounts. So if you then need to transfer money to any chama member, you can do it instantly at no cost. And we're also working on another product whereby we'll actually be able to provide an administrative background or platform to the chama members where we can, because one of the issues chamas have is to track which money came in from who, and to be able to generate individual statements to the individual chama members. So there's a chama product we are working on, still a couple of months from being launched, but it will be able to support accounting and bookkeeping and statementing for chama members. So your money is working for you, and when you need to generate statements for each chama member, you can then easily generate it. So essentially everything is moving fintech and is moving digital, and that's going to be the advantage. It's no longer the biggest brand, it is really the most effective brand that is going to win. And be effective, you have to deliver good returns, deliver good client service, and deliver really great digital service to your client.
So much for that overview. Now, in terms of the money market industry, and you are a part of that group of companies, is this the norm with other companies? Is what you're doing exceptional? How is it different from how the other money market managers are engaging with their clients today?
Maybe before I talk about money market, let me just look at the asset management industry in general, or financial services in general. If you look at mobile money, The Safaricom has been at the front end and really made it very digital in terms of being able to transfer money. Then the banking sector has followed in terms of digitization. I think the two places where there's a lot of opportunity is insurance and asset management. I see insurance is moving closer and closer to fintech and digitization. Asset management is still very much paperwork driven, and also what I would call a lot of disabling regulation. So the regulatory environment needs to move forward and allow for a lot of digitization. To open a money market account, you don't need to fill in 7 pages. I don't know if you've ever opened one. You ask yourself, but somebody just wants to invest 1,000. Why do you have to fill in all these forms? So to look at it in terms of, if the goal is to know your customer, this customer already exists in some government database. Why can't I ping the government database for them to confirm, yeah, that person exists? Because the government then, based on that database, you have an ID, they can tell where you live. So rely on existing database to do your KYC rather than asking people, bring me your ID. That ID already exists in a certain database. So I don't need to see your physical ID. I don't need you to make copies for me to know that you exist. So I think asset management has a big opportunity to digitize. And for us, that's what we looked at and said, okay, if we are going to compete in this market, what is a unique way to compete? And digitization is one unique way. Now, not to sound immodest, but there's no other money market fund in this market where you can be able to withdraw your money and have it for you within 3 minutes. Now, of course, they are not sleeping, so I'm sure they are going to be developing their own technology platforms. Now, once they've been able to allow that withdrawal within 3 minutes, the next thing is going to be, where are you taking the money? If you look at the current money market funds, the assumption is when you take it out of your money market fund, it has to go to your bank account. But why can't it go to ultimately the destination for which the client needs the money? So if they need to pay someone, we need to enable the integration between the money market fund and paying whoever they want to pay and paying whichever bills they want to pay. Now, of course, there's going to be a discussion to be had there. A lot of people, once they hear that, wait, you mean from the money market fund, I can pay bills, I can transfer money to people freely, I can send it to bank account, and I can send it to M-Pesa. The next thing you'll hear people saying, but that sounds like banking. But financial services are converging. It's going to be very difficult for you to tell which is a bank from a digital perspective, which is a bank, which one is a money market fund, which one is mobile money. You've had Safaricom itself is now considering Mali. So they are moving towards money market fund as a product. They have Fuliza, which is a loan product. And then you can, M-Pesa, you can transfer money. That sounds like a digital bank to me. So there's going to be a convergence. The question is, where are you coming from? Safaricom is coming from telephony communication side. Banks are going to be coming from banking. Ourselves, we are going to come from the asset management side. Insurance companies are going to come from the insurance side. And what is going to be important is, how can you serve the client from your own regulatory environment? In fact, the Cytonn wallet, the next feature we are bringing in is ability to buy insurance. We don't have to be an insurance company, but we can sell an insurance product on the Cytonn wallet. So convergence is going to be the theme that you are going to see a lot. Asset managers have been late to the game, but we are going to push very hard. And of course, once you start moving, then the industry also moves along.
I mean, that's very informative. I was just about to ask you if you're looking to become a bank, but I like the element of convergence. When you also speak about good customer service, how is the accessibility of information by the customers? And I ask this because I do have a fund. I'm an investor through the money market funds in Kenya, and you're absolutely right. First, joining is a ton of information that I have to sign in. There's that whole physical movement of paper. The other thing that I find interesting is I never get visibility of what I'm doing until a particular time, if it's probably the end of the month or something. So there's a lot that happens, and at times that lack of visibility of my participation and inclusion in that particular money fund actually deters some of the decisions that I make. So is there a way that your particular Cytonn wallet engages and gives schematics or pictorials to the investors in terms of where they're at and even where they're trying to get to in terms of their financial goals?
Yeah, having everything on the phone, we are all pretty much, we're not working or we're not engaged, we are all looking at our mobile all the time, we're on social media. So we have to have a great app that investors can log into and be able to interact in terms of changing account details. This is no longer my bank account, change it to this bank account, being able to get information, basic analytics, how much did you make from your money market fund, depending on how often you want to see it. Do you want to see your interest daily? Do you want to see it weekly? Do you want to see it monthly? Do you want it sent to your mobile number, or do you want it sent to your email? So that interface and interaction with clients is going to be key. We have ours up and running on the app, but it still needs a lot of development. I'll give you a very simple example. You should be able to schedule, if there's a bill you are paying every month, you should be able to schedule an automatic transfer from your money market fund for that particular bill every month. It should just happen like clockwork. Your DSTV bill should come, and you should be able to go onto your money market fund dashboard and say, send X amount to DSTV. If there's a certain person you're supporting every month, I'm sending 5,000 shillings to so and so to support them every month. I should be able to go to the dashboard and say, every month, take 5,000 and send to this particular person. So in terms of information, analytics, how the asset management industry interacts with clients, for lack of a better word, we are really still in the dark ages in terms of it's still very much paperwork driven, and it's still very much you have to wait. In this day and age, why does anybody have to wait any amount of time for them to access their money market fund? So I see the industry is going to digitize very fast. There are regulatory challenges to be addressed, but luckily the regulator in this case has been very open and listening to industry participants in terms of what needs to be done for the asset management industry to compete with the banking industry. I'll give you one interesting statistic, Mbithe. In the developed world, capital markets account for 60% of business funding. Banking only accounts for 40%. That's why Wall Street is considered a big player in a market like the US. Come to Kenya, businesses depend on banks for 99% of their funding. Only 1% is coming from capital markets. So it tells you something is stuck somewhere with capital markets. And that's why we are pushing very hard to have the regulations be more investor friendly, to have the interaction be more investor friendly. Because, for example, if you can go put your money in a fixed deposit and you can access it anytime based on your agreement with the bank, why would you go to a place where it takes you 3 to 4 days for you to access your money? So there's a lot of work to be done in capital markets, and there's a lot of interest from investors. We just have to make that interaction as easy as Safaricom has made it with M-Pesa, and the banks have made it with online banking. So it's really online asset management, or wealth tech, as some people call it.
Need to have you back on our show to have that whole conversation of why are investments funded by bank lending as opposed to equity raising. That's always an ongoing conversation, at least from where I stand, because it just never makes sense. Then I think as we're coming to the tail end of this conversation, when you talk about accessibility of funds, I know there has been a bit of coverage out there on social platforms where some people are saying they've put money into the high yielding fund and you have actually carried forward the dates of redemption. I don't know if it's something that you can shed light on. How can people access the funds in some of your asset classes if they've been told to wait for, I think it's been 90 days, that's what we have seen. So I just wanted to run that by you and get your sense of what investors can do.
Almost 90 days. Now, let's step back and look at which funds we are talking about. Largely speaking, we have two sets of funds. We have the highly liquid funds, like the money market fund. That's the leading liquidity fund. So this fund fundamentally invests in government paper and also invest in bank deposits. The target return is 10 to 11%. So you are getting highly liquid investment, but because of the liquidity, of course, the rate is going to be lower. Now, we have the real estate funds. And these funds, essentially what we've done is, if you have 100,000 shillings, instead of giving it to the bank and getting nothing for it, you can give it to us and we pay you the same rate we would have paid the bank, because the ordinary transaction is that Mbithe has 100,000 shillings, you give it to the bank, you get almost nothing for it. I go borrow it for real estate development, I pay 16 to 18%. So we wondered, is it possible to have a structured product where we structure out the bank as an intermediary? I come directly to you and I give you the same rate that I would give to the bank. Now, what then happens in that case? You are no longer a depositor, you are a lender to us, because you are lending for us to go put into real estate project. Now, because it's put in real estate project, of course it's going to be a liquid investment. That difference between 11% that you get in a money market and the 18% you get in the high yield fund, the difference is the liquidity risk that you are taking. You now have a less liquid investment but higher yielding. Now, when something like COVID happens, of course we have to close down our real estate sites. The people who are buying the real estate won't be buying as much as they did before, and those who have bought will ask for more time. Now, the same way any other developer or any other borrower in this market goes to the bank and say, restructure my loan. That is ordinary in this environment. For us, our bank is this high yield fund. So the project then goes to the high yield fund and says, just the same way any borrower would go to a bank and say, I need more time, we are going to come to you and say, we need more time in terms of principal payments. And that is in the contract. If you get one of those contracts, because real estate is illiquid, you always have to build in a liquidity stopper. The contract says you first go for a 3-month extension, then you go for another 3-month extension. If then COVID, and because real estate will remain challenged in this environment, if COVID is not yet resolved, let's say within 6 months, then you go to the investors through the board, because there's this perception that Cytonn didn't give people access to their funds, yet in reality, Cytonn is a manager of the fund. The investors themselves are on the board. They are the ones who make the decisions, we just execute. So that 3 months extension reflects that liquidity risk in that particular asset. And it's not unique to Cytonn. If you look at pretty much all real estate funds globally today, they've taken some sort of mitigation measures. Either they've suspended exit, they're extending maturities. You saw, and not just real estate, you saw the other day Equity Bank said, yes, I've declared the dividend, but given the current environment, I'm going back on it. I'm not going to pay it. You've seen NCBA go back on their dividends, Stanchart go back on their dividends. So it's more of a reflection of the time and the asset class. Real estate in this market is not going to be as liquid as it used to be before. Money markets are, if you want liquidity, money markets is the place to be. If you want yield, you will get yield, but you want liquidity at the same time.
Edwin, can you still hear me? I think I lost you there for a second.
Yeah, I can hear you. I think internet went south for a second, but I can hear you now.
Elaborate answer. And I mean, I'm sorry to just belittle on this point, but so now what happens if you have to extend by 3 months and another 3 months? At what point do this people get their money? Because I do understand when you say that they have actually lent to a particular project, but if my intention as an investor is to put my money for a year and I wanted to actually do my own personal projects, how do I reconcile that? I don't have access to the money and I'm not sure when I'm going to get it. And I ask this in line with the conversation, that the example you've given of NCB and equity, because those ones, when you're giving a dividend, it's not promised. But when I put my money in a money market fund, I hope to get it back at the time that I had actually intended to get it back. So how do you manage that expectation gap? And fair enough, no one had actually anticipated this crisis. So I'm wondering if I've put my money there, what would be a good way for me to manage my expectations without necessarily going the way of what we've seen people venting and getting angry? What would be a good way to manage expectations?
First, it's good you've talked about people going around venting, because in investment that will never quite get you money. It will just end up sinking you further, because investment is a game of confidence. Now, remember, it's not a money market fund. A money market fund is the 10 to 11% product that is easily accessible. As I said, you can get it in and out based on your phone. This one is a high yield. So essentially, majority of the investors actually understand that what is assured here is the yield. That's why it's a high yield product. So, and we continue to service the yield. There is always that risk of illiquidity within real estate. So really what you should be putting in high yield fund is money where you say, I'm going to renew it every year or 2 years, but what I cannot compromise on here is that I'm growing my money based on a yield, and I'm accessing that yield over a period of time. Whenever you invest in real estate, whether directly or indirectly, so for example, today if you bought a piece of land and you say, I'm going to hold it for 2 years, then exit, you will not be guaranteed an exit at the end of that 2 years by going to sell a piece of land. It will depend on the prevailing market conditions. So what we are doing is continually educating our investors. And of the 3,000 investors, I would say probably 2,500 understand the product very well. There's that other 500 clients, and I know times are tough. So people will say, I'm going to reach into my high yield fund to be able to fund my needs at this particular time. But high yield fund, the reason why it pays that 16 to 18%, there is an illiquidity risk that is priced in. So you cannot both have the yield and the liquidity together. So we just have to speak to them on a one-on-one basis and explain this is the nature of it. If you want liquidity, then this is the other product. But you can't have liquidity and high yield at the same time. The two don't go together.
Thank you so much for the elaboration on that. That's all the time we have today. We wish you all the best and with your Cytonn FinTech product. Thank you for also elaborating on what's happening there, and we'll keep a lookout and hopefully we can have you again in studio just to give us more insights if the need arises. Ladies and gentlemen, it's been a very exciting time speaking to Mr. Edwin Dande, who is the Chief Executive Officer of Cytonn Investments. We've looked at financial technology in the area of asset management, and that's a means of enhancing distribution. And Cytonn hopes to be able to speed up the process of you accessing your money from the money market fund from 3 days to as little as 3 minutes, if not seconds. Over and above that, Edwin has taken us through the different assets that they have, the high-yielding fund as well as the money market fund. The high-yielding fund is related to real estate projects, and thus the issue of the COVID-19 has actually had an adverse impact in terms of the cash outflows there. So it could be a bit of a time before this money comes back, but that's an ongoing conversation between his team, management team, and the board. Thank you so much for joining us today. We hope to see you same time tomorrow. Good day.